One of the most effective tools utilized by the rich. How are you guys doing today? My name is Apple, and today we are filling in the financial gap between schools and the real world. And today what we're talking about is the pros and the cons of an LLC. So in this video, we're going to cover what is an LLC, the pros, the cons, and then how you can actually go out and make your own if that is something you're interested in. So be sure to stick around, leave a like, subscribe, share this video if you enjoyed, and without further ado, let us just hop right in. So what is an LLC? If you're like wondering what the heck is an LLC in the first place, how did I get to this video, what is even going on? Let me just break it down for you, sweet and simple. Okay, so an LLC is a type of business structure. It stands for Limited Liability Company. So it is a way for you to structure a business, similar to like a corporation. I'm sure you've heard of corporations before, all the big names, Coca-Cola, Apple, IBM, all these guys are corporations. LLC is a different type of business structure than a corporation. So there are three primary business structures in the US right now. Let me write those down for you. First one, sole proprietorship. Second one, corporation. Third one, LLC. So what is sole proprietorship? Sole proprietorship requires no paperwork, and 3, 2, 1, boom, you are now a sole proprietor. You just started a sole proprietorship business. Good for you. That is how easy a sole proprietorship is. There's really no paperwork behind it. There is no payment. You don't have to pay to establish a sole proprietorship. You can just say you have one and boom, you have a sole proprietorship. So there's no additional taxes for that. And the big thing is there's no legal separation between you and your company. So if you have a sole proprietorship, your company is you. However, what we're going to see with some of these other business structures is that's not quite the case. And creating some of these actually creates another legal person. So that's pretty cool. So let's get into that. Okay, so corporation is our next business structure. And what a corporation is, it's these big guys, these big names, like I talked about, Apple, Microsoft, all these guys, corporations. Okay, so with a corporation, what you got is you got a lot of paperwork you have to do. You got to fill out a lot of paperwork in order to form a corporation, and there's a lot of regulation on that as well. So, I mean, if you're a big company, if you're a corporation like Apple, Microsoft, you have to release some certain documents to the public. You got to release your balance sheet, your income statement, your earnings, your revenues, all of these things have to be public information when you're a corporation because people can invest in your corporation and you have to be able to disclose all of the things that you're actually doing so that people get a full picture of what's actually going on with your company. Clearly, this is not the case with a sole proprietorship because it's just you running a little business. You don't have to release your earnings to the public because honestly, nobody probably cares. So with a corporation, you got these regulations and you got this paperwork. And with a corporation, you're actually taxed twice. You will get double taxation on a corporation. And why is that? Well, legally, your corporation is actually another person. It is a legally recognized person is what a corporation is. So your corporation, this person that you have created by creating a corporation, is taxed once when Apple sells a computer. Apple, the corporation, makes money. And then when that money gets paid out in the form of salaries, in the form of dividends, in the form of anything to the shareholders, to the people who work at Apple, it is actually taxed again. So when a corporation makes money, it is taxed twice. When a sole proprietor does it, it is taxed once because you and your company are the same entity. With a corporation, this is not the case because your corporation is a separate entity that is taxed on its own. So this makes some business people pretty angry, and this actually just caused the tax rate to drop for corporations because people were mad that they were getting taxed so much, and our president decided to create a new tax plan that would lower the corporate tax rate, the tax rate on that imaginary legally recognized corporation person. And beyond double taxation, there's really a big significance behind having a separate legal person with your corporation. And what is that? Well, it all comes down to liability. So if something goes wrong with your company, if you do something that turns out to cause some damage and you're on the line for that, if you're a sole proprietor, say you're a sole proprietor, you got a painting business and you are painting and you hire in a college kid to help you paint a house. The college kid's on a ladder, the ladder breaks, the college kid falls and they break their ankle, whatever. They've got a couple $1,000s worth of medical bills and they decide to sue you for that money because neither of you had any insurance. So they sue you, and because your company and you are the same thing, then that you are personally liable for any damages that occur to that person and for those medical bills. So you could be on the line to pay those. However, with a corporation, this is completely different. So let me give you a quick example. Say you open up the Wall Street Journal tomorrow and you find out that Google just got sued for $1 trillion because their self-driving car campaign was really just a strategy to kidnap Nickelback. And they get sued for $1 trillion, they go completely bankrupt, their stock price goes to zero, and you were holding Google stock. Now, as a part owner of Google, you're not gonna have somebody come knocking at your door saying, hey, since you own part of Google and Google went bankrupt and they got sued, you actually owe us $1,000. In addition to your stock price just going to zero, you also owe us $1,000. No, that's not gonna happen like that because corporations have a thing called limited liability. So because you are a part owner in this corporation, you have limited liability. You can only lose what you put in. So you invested $1,000 in Google, you can lose all of that, but you can lose no more. There's nobody who's going to come knocking at your door if you own a part of a corporation saying, hey, we need more money because you got sued. That is called the corporate veil, and it sort of separates the corporate person from the individual investors that invest and own that company. All right, so now let's get into LLC. So you got corporations, you got sole proprietorships. What about an LLC? So let's talk about the pros and the cons of LLC. It's sort of a mix between the two, between the sole proprietor and the corporation. It's sort of got the best of both worlds, in my opinion. So the pros, the first pro, big pro, is that it incentivizes innovation and it incentivizes you to start a business. So as you can tell from the name, limited liability company, it's got limited liability, so it's got that part of the corporation included in it. So if you start an LLC, if you start a limited liability company, and you get sued, if the company gets sued for something the company did, they're not suing you, they're suing the company, and you are not personally liable for those debts. You can only lose what you put in. They can't come after you. They can't come after you for your house, take the shirt off your back, none of that stuff, because you're not personally liable. You've got limited liability. And that is the main reason why the government decided to put a LLC in place, is to incentivize smaller businesses and business in general to start and to go out and try something. And even though it might fail, they're not going to lose their house, they're not going to lose their car, they're not going to lose their life in the process because they have limited liability. So yeah, like if you get sued, if your painting business gets sued, but you're an LLC, you can lose the money you put into your business, but they can't come after your personal assets and your personal like savings account or your house or anything like that. Okay, so another pro, it's easy to set up. It is so easy to set up an LLC. We're gonna talk about that at the end, but I have my own LLC. It was so easy to set up. It took me literally 5 minutes to set it up. So it's really easy to set up an LLC. It's cheap as well. So the LLC that I set up cost me $125 to do. I mean, in the grand scheme of things, $125, not that much to start a business, in my opinion. And it's going to cost another $25 per year to renew that. So in my opinion, that is a very small price to pay for keeping my personal assets safe, given I don't have very many personal assets right now. But $25 a year is a low price to pay, in my opinion, for keeping my personal assets separate from any business assets that I have. Another pro is there's no double taxation. So like we said with the corporation, you got your corporate person and you've got you. So your corporation gets taxed and then you get taxed. However, with an LLC, this is not the case. So like I said, it's sort of a mix between your corporation and your sole proprietorship. And in this case, you get the benefit of the sole proprietor who only gets taxed once. So with an LLC, you don't technically have a corporate person, you just have the corporate veil, which separates you from your company. So the company is not considered an actual legal person like it is in a corporation. You're just separated. It just separates your assets from your company assets. and your company doesn't get taxed by itself. That income just gets taxed when you receive it. So you get to avoid that double taxation that comes with a corporation, which is very, very nice. This is why an LLC is also called a pass-through entity. So it's not a full-fledged corporation entity, it's just a pass-through entity. So you just pass your income through the LLC to yourself to shield yourself from any potential losses, potential lawsuits. And instead of it getting taxed there, it just gets taxed when it gets to you because it's just a pass-through entity. Okay, so it also makes you sound official. So I mean, having LLC at the end of your company name, that really just takes it to a whole other level. So here's an example. Say you started a company where you sold office chairs, and you started with your buddy and you called it the Chair Guys. So you're just going around, you're like giving people your business card saying the Chair Guys, come by from the Chair Guys. But if you get an LLC, then your name now becomes the Chair Guys LLC. So in my opinion, that sounds a lot more official than just like your business card with the Chair Guys, business card with the Chair Guys LLC at the end. In my opinion, that's gonna sound a lot more official, and that could actually get you some more business because people are gonna see you as a more established business. You went through the trouble of setting up an LLC, even though it only takes 5 minutes and like $100, but you still went through the trouble of doing that, so they know you're a little bit more serious about the business that you're actually doing. And like I said, the main benefit is just it shields your stuff. So if you get sued, if your company gets sued, you're not going to lose the shirt off your back, and your house and your car and all your money. It's going to be protected by that pass-through entity of an LLC. All right, but now there are some cons that you have to take into account with your LLCs, just because it's not all amazing. There are definitely some serious downsides to your LLC as well. So the first one is limited growth potential. So you're really limited in the amount that you can grow as an LLC, because as an LLC, you are not allowed to go public. So if you're not familiar with the term going public, it is basically just when a company starts getting traded on a stock exchange. So I mean, Apple is a publicly traded company, so is Microsoft, so is IBM. All of these guys are public companies, and with an LLC, you're not actually allowed to become a public company. You have to stay a privately owned company. So this really limits your growth, because what companies do is they go public in order to raise money. So when a company goes public, it is through an IPO, or initial public offering. So what happens with an IPO is a company splits their ownership into a bunch of fractional segments that they sell off on the stock market, and they make all of their money from their stocks when they do that IPO. So it's a great way to fundraise and take your business to the next level. But with an LLC, you are unable to do that. There are some ways that you can eventually move yourself from an LLC to a corporation, but with an LLC, you are limited in that you cannot go public. You cannot become a publicly traded company on a stock exchange. Next, LLCs are not uniformly recognized across states. So this was more of an issue a couple of years ago. Now it's pretty well recognized that an LLC is an LLC, no matter if you're in Montana, Missouri, Maine, I don't know, I'm thinking of M states, Minnesota, but an LLC is an LLC pretty much across the board now. But there are a little bit of discrepancies from state to state, so you got to keep those into account if you're operating across state lines. If you're just operating in your own state, this isn't very applicable, and that's fine. But if you're all operating across the nation, you got to keep in mind the LLC rules from state to state. Another con is that they could be pricey. Now, there's a couple states that your LLC is going to run you like $300 or more. There's I think 5 or 6 states where that's the case, but the most notable is California. So California is actually going to charge you $800 a year for your LLC, which in my opinion is bananas, because I'm only paying $100 at first, and then $25 a year. So $800 is why? But most states are going to only charge you $200 at first, and then under $100 a year. So it won't be that big of an expense, but there are, depending on what state you're in, there might be some bigger expenses for you. I think it's California, Pennsylvania, and New York, the top 3 that are all over 500 maybe. But in most states, it's only going to be $200 to start, and $50 a month or $50 a year at most. Next is you're not actually considered employed by this company. You're considered to be self-employed. So that is going to put you as having to pay a self-employment tax, which can be a little bit pricey. You just have to account for that in the business that you're doing. You're going to have to set aside your own taxes. You're going to have to set aside money that is going to be paid to the IRS. And you're just gonna have to be mindful of your taxes as a considered self-employed person. So definitely just keep that in mind. It's not really a con, but it's just something to keep in mind. Next, there's a restriction on having a lot of owners. So when I say a lot, I mean like over 100. So for most people who's starting a business, this is not gonna be a big deal. You're probably not gonna have hundreds of owners, but if you are, there might be a different type of business structure that would work better for you than an LLC, because there are some restrictions when you start getting into the hundreds of owners. So as you can tell, all of these cons are really very semantic. They're just like logistical issues that occurred for like a very, very small percentage of people. And they're just immensely, in my opinion, immensely outweighed by the aspect of limited liability. So the aspect that if my company gets sued, if I mess up, if I make a mistake and my company gets sued, I'm not on the line for that personally. My company is, and I can lose everything that I invested in my company, but nothing more. Not a dollar more can I lose by making a mistake with my company. So that is just a great, great incentive for me to go out there and start a business, because I know that I won't lose the shirt off my back. I won't lose any assets that I have. All I can lose is what I invest in this company. Okay, now let's talk about how to start your LLC. So there are two steps to starting your LLC. The first one is a Google search, and all you have to type in is your state LLC. So if you're in Minnesota, Minnesota LLC. The first result is probably gonna be an advertisement, so don't pay attention to that. But then go to your official government website. It really varies from state to state which government organization or which government department is going to cover the LLC, but just find your government's website, click on that, and find the Articles of Organization PDF. So you gotta get that PDF, you gotta print it out, fill it out, or you can do it online, even easier. But yeah, you just Google that, find the Articles of Organization, and it sounds intimidating, but actually the Articles of Organization only have to include 4 things. 4 things you have to know to start your business, start your LLC. First one, your LLC's name, your company's name. All right, got that. Next one, your name. You probably know that. Next one, other owners' names. Okay, you probably got that one. Now what's the last one? Some money. Okay, easy enough. All you gotta do is give them like $100 and you now have an LLC. All you had to do is give them 3 people's names and you're good to go. So that's basically it. Congratulations, you now have an LLC and you are able to go out there and start doing business with the confidence that you are not going to be liable for all of the or any of the mistakes that your company makes. And you don't have to worry about getting sued for your life savings. That's gonna wrap it up for the video, guys. I really hope you enjoyed. If you did, be sure to leave a like, subscribe, share this video with a friend, and check out my brand new website, applecrider.com. We got a blog going over there and lots of cool stuff in the works over there. I will see you guys tomorrow, and until next time.